Today, we're going to dig into something really special. It's a single letter from a young Warren Buffett way back in 1960. But inside this letter is one of the most incredible business puzzles you'll ever come across, an investment that really lays out the foundation for his entire philosophy. So let's get right into it.
And the puzzle is this: how in the world can a successful 75-year-old company, a leader in its field, be worth less than nothing? I mean, it sounds completely impossible, right? Well, the answer lies with a fascinating little business called the Sanborn Map Company.
Okay, just look at these numbers. It's a total paradox. Back in 1938, in the middle of the Great Depression, the market said Sanborn's map business was worth $90 a share. Makes sense. But fast forward to 1958, the economy's booming, and the stock price has totally collapsed. And the crazy part? This happened while a pile of hidden assets inside the company more than tripled in value. The market was basically saying the actual map-making business was worth negative $20 per share. You could buy their awesome assets for 70 cents on the dollar, and they'd literally pay you to take the core business off their hands. Wild. So, how on earth does that happen? That brings us to our first section here, the map company's mystery. We're going to peel back the layers on this truly bizarre situation. You know, to really get this investment, you first have to understand the investor. The guy who spotted this crazy discrepancy was a 30-year-old money manager from Omaha. And he wasn't just looking for good companies. No, he was looking for broken ones that he knew he could fix.
And his strategy was all about one thing, and this is so important to understanding the Sanborn deal. It was all about beating a losing market. Just take a look at 1960. The Dow Jones Average actually lost over 6%. It was a bad year for pretty much everyone. But Buffett's partnerships? They were up almost 23%. This wasn't just a small win. It was an absolute rout. The real question is how he managed to pull that off.
And this quote tells you everything about his mindset. For him, success wasn't about just riding a bull market when everyone's making money. No way. True success for him was about protecting your money and doing better than everyone else when they were losing money. He really believed his big advantage would come in flat or down markets. And the Sanborn Map Company? It was the perfect vehicle for that philosophy.
All right, so let's pop the hood on this company. What was this treasure hidden inside Sanborn Map that let him get this kind of performance totally separate from what the rest of the market was doing?
Well, here's the secret. Sanborn wasn't really just a map company. It was basically a holding company. See, on one side, you had the actual business that made these incredibly detailed maps for fire insurance companies. But on the other side, it had been quietly building up this huge investment portfolio of stocks and bonds that had nothing to do with making maps. It was two completely different businesses masquerading as one. And financially, the company was being torn in two. The map business, which used to be a total cash machine, got lazy. New competition came in and just ate away at its profits. But the whole time, its investment portfolio, funded by all those old profits, was just exploding, growing from $20 per share all the way to $65. The problem? The market only saw the dying map business. I mean, the value was obviously there. The company's portfolio was worth $65 a share, but the stock was trading at just $45. The problem wasn't the assets. It was the management. The board of directors was completely asleep at the wheel, just collecting their fees while the core business fell apart and all that hidden value stayed locked up. And this is just incredible. Look at who owned the stock. Of the 14 directors on the board, 9 of them were big shot insurance executives, who, all together, owned a grand total of 46 shares. 46! The company lawyer had 10 shares, a banker had 10. Their interests were totally out of line with the shareholders because they had practically zero skin in the game themselves. They had no reason to make the hard choices to unlock the company's real value. And this is where Buffett, the activist, storms onto the scene. He saw the problem wasn't the business, it was the board. So he set out on a mission to unlock all that trapped value for himself and for every other shareholder. And he had this clear step-by-step playbook. First, a little bit of drama on the board created an opening. A director resigned in frustration, and Buffett swooped in and bought his family's huge block of stock. Next, he went out and found other unhappy shareholders and brought them all together, creating a voting bloc that controlled nearly half the company. And with that power, he proposed a simple, brilliant solution. Just separate the two businesses. Let any shareholder who wants to trade in their Sanborn stock for their fair share of that juicy investment portfolio.
So did it work? Oh, you better believe it worked. The result was absolutely overwhelming. When they were finally given the choice, a massive 72% of the company's stock was turned in. Shareholders practically tripped over themselves to get their hands on those portfolio securities at their real value, instantly closing that gap between the $45 stock price and the $65 in assets. Buffett had forced the board's hand and unlocked the treasure chest.
So you see, this one investment, this little melodrama, as he called it, perfectly lays out the core ideas of his early investment philosophy. It's really a masterclass in value investing.
This is what he called his bread and butter business. First, you find a company that's trading for way less than it's actually worth. That was the hidden investment portfolio. Second, Sanborn was what he called a special situation. His profit didn't depend on the Dow going up or down. It depended on one specific thing happening, separating the portfolio. And third, if the management wasn't going to do it, he would get enough influence or even outright control to make sure it happened.
And the proof is right here in the numbers. This philosophy absolutely worked. Just look at these compounded returns over 4 years. By 1960, his partnerships had gained over 140%. The Dow, in that same period, up just over 42%. He wasn't just beating the market. He was creating his own market with smart, activist investments like Sanborn Map, making money even when the rest of the market was stumbling.
And that brings us to the final thought, really. The Sanborn Map story happened over 60 years ago, but the lesson here is totally timeless. It really forces us to ask, what are the Sanborn maps of today? Where is the market right now completely misjudging a business, or ignoring a hidden asset, or being held back by a lazy management team? The lesson from 1960 is that for anyone who's willing to do the hard work, there is always value out there, hiding in plain sight.